So what does this all mean? To help us figure it out, we're joined by Richard Nassimi, the president and CEO of the Nassimi Group. Richard, as always, good to have you.
Pleasure to be always back here, Michelle.
Richard, let's start off with the most recent data. Existing home sales down 7% in February from Jan. Is this just a blip, or is this a warning that something bigger is on the go?
I am pretty sure and scared that it's a warning. Don't forget, from January 2015 to January 2016, we had a rise of 11%. Just December 2015 was a record-breaking price, 14.7. That's back to pre-Lehman in 2006. It was one of the best years.
Okay, so it's a warning of what? What is this telling us?
Well, the world is in a turmoil. The economy, especially in real estate in America, was funneled by China, by Russia. All of them seem to have cooled off. Many people are looking to other kind of markets to supply America in the sense of real estate. So slowly we're starting to lose the main buyers.
So you think that the housing market in the U.S. is definitely slowing down?
Definitely.
And what does that tell us then about the U.S. economy?
The U.S. economy right now is not getting affected because in pre-Lehman, the subprime was the main factor. Bad credits, banks just giving loans out. This right now, it's a different kind of situation. We have foreign investor fund putting money inside our country, but with the devaluation of their currency, they're all backing off. So our economy will feel it in the next 3 quarters.
So it's more that foreign buyers aren't coming in and less that U.S. buyers are backing off?
U.S. buyer has never been there so much. Don't forget that the first home buyers, the data shows us that they're down 43%.
Right.
In the past 4 years, 43%.
Well, Richard, how is the Fed factoring into this whole conversation? When there was a feeling that the Fed was going to raise rates imminently, which would, of course, had a follow-on effect on mortgages, people rushed to buy to take advantage of that. Now we really don't know what the Fed is going to do. So how is that impacting the housing market? Well,
let me tell something in advance. The Fed always loved to keep us a little bit on the edge.
That is definitely their play. Keep us guessing.
They enjoy it because the economy, not they enjoy it, but the economy always seems to turn a kind of twist around. They said that they would raise 4 times in the next 4 quarters. That means that every single quarter of 2016, we're going to see a quarter point up. I don't believe that.
Yeah, that no longer seems to be the case. The general consensus is that we're not seeing 4 interest rate hikes this year. But when do you anticipate the next rate hike?
I think end of March is the first time they're going to announce it. I think they're not going to change it. I think they're going to change it one more time. They will increase it one other more time in 2016, maybe in quarter 3, when the inventory in the market going to become at the highest percentage. Don't forget that quarter 3, we're expecting about 5,000 apartments on the market, only in New York City, without forgetting nationwide.
And this is because of a construction boom that we're going to have a surge of 5,000 apartments?
It started in 2014. In 2013, they started again the construction hype, and now they're starting to cash in. But the economy slowed down, and reality is kicking in.
Well, one thing that tends to indicate that something's on the horizon is when we look at home flipping. And Richard, we got data that flipping, buying and reselling a home just to make a quick profit rose about, well, it's to higher levels than it was in 2005, which was when we started to see the housing bubble start to form. According to Realty Tech, home flipping in 12 active metropolitan areas was above that peak set in 2005. Profits generated by home flipping hitting a 10-year high. What do you make of all of this?
This is the main issue, if you ask me, because right now, real estate used to be a purchase, a place where you live. Now it became a pure business. In 2014, it was up 5.3%. 2015 was up 5.5%. In 2016, I think I'm going to hit the maximum. And then in 2017, it's going to stop.
Okay, so you feel like we're heading towards the edge of that cliff.
We're already there.
We're already there.
We're already there. It just didn't feel yet the big economies because it takes some time to get there.
So overall outlook for the housing market?
We're going to be very careful. We have to be very careful. China is out because the yuan is down. China is completely out slowly. And in 2017, I think they're not going to be around. Many other investors are looking elsewhere to fund their own development.
All right, well, thank you as always for your insight. Richard Nassimi, President and CEO of the Nassimi Group.